we just cannot say that we didn't do, we means the sector,
right,
did fail in some way. And then I think somehow we distanced ourselves from our clients, the very same institutions which were closer to the clients because of the kind of a growth moved away from the clients in many ways. So I think they didn't realize the pulse of it, because what intrigued me was why the people were not coming out and saying that these are the institutions which are critical for our economic being. Somehow they were very silent. So it is not that the institutions did not help them. I'm sure that it impacted the life. I have seen in the last 20 years the kind of a change that has occurred in the lives of the poor. We cannot take the entire credit for it. But somehow I think we kept away from our clients and we haven't interacted the way we should have continued to interact. I think that is where the failure was. One, commercialization of microfinance sector, as we have seen in all the papers, have driven the growth much faster than it could absorb the kind of, the profit and decide what to do with the profit, how to distribute or give it back to the poor. That process didn't happen. So it was too quick. And the growth was 200%, 300% growth. Amazing. So I think there were lots of other pressures that came with growth. And everybody's interest has to be taken care of. Maybe in the priority list, client interest became the least important one. People were not there with us. That is one of the horrible things that had happened in the crisis. And it was also a truth that hit us on the face.
Right.
So somehow we haven't done things properly.
Right.
So it is important for us to do something differently now. Actually, to be very frank, we are not doing anything different now. We are doing the same thing which we did, because 60 to 70% of our partners or clients are institutions that are in the non-profit sector, which are doing much more deeper work of poverty alleviation. Many of them, to them, credit is only one activity.
Right.
Many of them combine lots of other activities. Some of them are good in health care systems, and some of them are doing insurance. Some people are taking care of the education of the children. So those institutions are also not very big. They have 20 to 30% growth rate every year, and they do very intense work in a specific area. These institutions are safer. So now the challenge is that bankers who had a higher exposure in Andhra Pradesh-based institutions have suffered a lot. You have to also look it from their side. That suffering has resulted in them shying away from providing loan to microfinance sector in general. So the casualty of the crisis is those ones who performed very well and who were not in Andhra Pradesh and doing very good work. So now what we have to do is convincing the bankers that these are the institutions which are also critical in the financial inclusion agenda. And how to combine these two institutions, the banking sector and these institutions, so that they can reach out to the poorer households in a much more effective way. That is what we are working on now. Money lenders have come back with a big bank. So they have a larger role to play. So you will keep hearing that there are daily interest rate charges. You borrow in the morning and repay in the evening, like daily advance. So all those things which we fought against for 20 years back have come back with lots of rigor.
Right.
So a space that was vacated by the big microfinance institutions and small microfinance institutions have been occupied by informal credit sources in a large way. So this has actually, if you look at it, whatever the poorer household has gained over 2 decades, they must have lost all those things. It's important for you to listen to the needs of the client from the client themselves. And there is no uniform need. It's a variety of needs women have. And it's also linked to the kind of age at which your client are joining you. If there is a middle-aged woman, 30s and early 30s, or I think her concentration is more on educating the children in the school level. So they don't get dropped out of the school. So there's a sufficient flow of loan support, coming or income level, improvement in the income level so that she can keep the children in school is her critical one. And second is health investment in health and then health education and as well as health insurance. So all these things comes out of the savings that she has to make. So when she becomes old, then her need is old age security, whether she will get something like a pension when she ceases to work. So unless you address all these needs of the client, she will definitely deviate. She will look for other sources which can provide this. And then so it is important for every institution to look at what are the needs of my client. Am I able to respond to it? If I am not able to respond to A, B, C, can I facilitate the process in such a way she has an access to these products and services? I think we have to look at it. So if we do that, I think client will be ours. They are very vulnerable, all of us know, because, like this crisis also showed how they were abandoned. I'm sure that all the households, millions of households, did have financial difficulty in taking care of their credit needs, which were critical for them to invest in their income generation activity or various other purposes. So they are so vulnerable, they didn't have a voice. We have to work out that how we can help them to, come out of this. So I think today that we are also as vulnerable as our clients. Right. The crisis had told us that it is time for us to invest more time in understanding our clients and their needs and then respond accordingly. I think in 1 or 2 years things will improve. That's what, because it's not only Indian crisis, there are lots of implications globally, things are happening which are also affect the economy. But I still feel that the bankers as well as the central bank, the Reserve Bank of India, recognize the role of institutions across the country which can contribute to the financial inclusion agenda. That recognition itself is a positive step and then good for us.